Welcome to our Market Masters segment. Well, the markets is top of the mind, so no point discussing economy at this juncture, the manner in which the Nifty is plumbing new depths, or the persistent selling by the foreign funds has left everyone connected with markets weary. So here's a person who has seen many cycles. Joining me to give us some advice and some context of what we are facing is Sridhar Sivaram, Investment Director at Enam Holdings. Sridhar, thank you very much for dropping in. And I can't tell you how many people will be, hanging on to everything you say, because there's a nervousness and unhappiness in the market. So first up, are we anywhere near the bottom, you think?
So, Latha, it's always very difficult to, predict short-term movements in the market. But as we discussed even last time, that 25, there's a lot of uncertainties, and Trump is being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had had 8 positive years, and it's highly possible that 25 is the year where we get negative returns, but it forms a base for the future. I mean, we can't have one-way markets. So I think in my view, this is quite healthy. We had a lot of froth. Some of it is already gone. We think some more is left in the small cap space. So that's how markets are. I mean, it's volatile. It's never one way.
No, we must come to the real story, the growth story, which, the India growth story itself remains. It's a question of the delta, faster or slower. But before I come to that, just one more question, since I will know whether the shoe is pinching you and how much. Are you in cash now, or are you reducing cash levels, or are you increasing cash levels? What's the position?
So as a house, we do have some cash. We've been bearish, or we've been cautious since September of last year. And I think some of it is getting utilized as we speak. As I said,
it's getting utilized. So
it is. And as I said, that there is opportunity right now, but there is also uncertainty ahead. So you don't want to put all your money to be used up at the same time. So it's a wait and watch, but at the same time where you get opportunities, we are looking to add. So 25 will be a challenging year. So I think everybody will get opportunities if you have cash. And if stocks which have strong earnings growth may fall lesser or even go up. So it's left to individuals to figure out. So
the micros will dominate.
Micro will dominate. Macros are not very favorable. Let me put it that way.
Okay, fine. Let me get to the micros, but in a macro fashion. See, while we must blame currency and Trump tariffs and what China will do next kind of milieu, we can't get away from the fact that our earnings growth slowed and slowed precipitously. Low single digits. When did we last see that? So what is your sense about earnings growth? Is it just going to be as good as nominal GDP?
No, so
or
we've had
will it turn?
So Latha, we've had great earnings growth. If you go back, say, leave FY25, if you take 21 to 24, we had almost, almost 20-25% earnings growth. For the first time in my history, I saw analysts upgrading earnings because every year we normally start at 17-18%, and then either we go down 1 or 2% or we stay there. It was in the last 3 years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. Even capex spending hasn't really picked up as much as one would have expected. So I think there's a macro headwind. Within India also there are some macro headwinds. This happens in a market. I mean, every market, every country goes through cycles. And maybe we are heading into one of those cycles where things are tough. But then we emerge from there, right? So that's how the markets also emerges. So,
but isn't this combo very good? We have a budget that has given us 1 lakh crore more taxpayers. So each one of us has got some 60,000 to 1 lakh rupees more to spend. As well, the liquidity is improving. As well, rates are headed down. Is that combo good enough to pull us out of the rut of the third quarter earnings?
So Latha, all tax cuts are welcome, but if I remove my selfish views, which is that I also got tax benefit,
80,000 more.
I think a petrol diesel cut would have been a far better way of doing it, because only 2 crore people benefited from the tax cut. Am I going to spend more of that 50-60,000? Possibly no. It may just go into my bank
account. Especially when the wealth effect is eroding.
Yeah. So I think a petrol diesel cut would have immediately gone into the system, and it benefits the entire 140 crore people. But if I'm in the FM shoe, it's a very difficult shoe to handle. So I cannot really complain. Everybody will have their own views. This is my personal view, that would have been a better way. Will all this have an impact? I think it will take time. Liquidity is something every banker is screaming. I think we need more liquidity. So if you speak to bankers, they say that what has happened is very good, but we need more of that. Rate cut, I think 25 basis point for that to have a transmission effect. See, today's newspaper is talking about corporates raising rates to get into the bond market. So there is no transmission effect. In fact, increased liquidity will have better transmission effect than a signal of a 25 basis point that we got. So we'll have to see how this plays out. But I think we are in the right direction. There is a cyclical slowdown. RBI and the government are on top of it. And it'll play out over a period of time.
Yeah, no, it's not very easy. You can't have an helicopter, like Bernanke said, and drop money.
Yeah, exactly.
Liquidity will take its time to get into the system. And, when we asked the SBI chairman, he said the rate cut will be transmitted maybe 2 quarters later.
Yes, exactly.
Right now, people are desperate for deposits. So, okay, you did say that this is going to be a micro year. Where would you look at?
So, as I said, in a micro year, so to start with large caps, they look far better. Even now, when we see some of the mid caps or the small caps, we very, very rarely invest in small caps. They still look quite expensive. From their own historical perspective, also keep in mind that we think earnings will also get cut. So there is a double whammy for them as the economy slows down. Otherwise, it is really stock specific. We do like financials. So that's a segment that we like. Discretionary consumption is the other one. As you mentioned, that the top 2% of India gets more cash, more money in their hands. We think it will more.
So hotels, airlines.
Yeah, so we think it will be more discretionary. It won't be staples. I mean, I'm not going to buy more soaps because I got 50,000 rupees more. It will be more discretionary. Okay. So we think discretionary spending is a segment that one should look at. The rest is very stock specific, Latha. Almost every segment has some impact of the tariffs if it were to come. So one has to tread very carefully and how this will move
tariff.
out.
2 questions I'm reserving. One, let me ask the first one, more important, gold.
Yes.
You were the big one who advised us, and I took your advice, to put some money in gold.
Yes.
You think, Manisha just tells us that there are Goldman Sachs expecting $3,100 as well. Yeah. It's still good to be there.
So, Latha, I'm very bullish on gold, and it's more an asset allocation call as far as I have made, which is that at least 10% of your financial savings should be in gold. And one of my primary reasons for being bullish in gold is that it's a hedge against our currency. I do think our currency heads to 90 maybe in years' time, in 9 months' time. Even if gold does nothing, I still get 4-5% more. But a caution here is that gold is up 40% in dollar terms in the last 1 year. We cannot expect gold to do the same every year. So it's easily possible that it consolidates. But if I look at the 20-year gold returns in rupees, it's up about 13.7% CAGR. Sensex is roughly the same. If you add the dividend, maybe the Sensex is up by about 50 to 75 basis points. So gold has matched, stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
No, I take your point that we must also look at capital economics saying that gold will settle at 2750. And I think that's a sane call. Yes. We cannot see it move one way. But now to the tariffs. How are you tackling it as an investor? Do you avoid, say, textiles? Textiles, actually, ours is very small. And we don't have, they tariff our textiles more than we tariff theirs. Auto parts, forgings, electricals. Yeah. Which ones would you avoid?
You can't avoid. At this stage, a lot of the policy is evolving. And we think that this is a negotiating tactic that Trump and the administration in the US is using. Unfortunately, India is on the wrong side. Our tariffs are high. One of the statements that Trump keeps making is that Harley-Davidson is tariffed at 100%. How many people use Harley-Davidson? Why can't we just make it zero? I mean, it's stuck in his mind. So I think it's the policymakers have to seriously think that if in pharma it is the high-priced cancer drugs which are tariffs at 70%, make it zero, because our entire industry of generics will benefit so much more than few people who can afford 2 lakh rupee drug. So I think this is something that the government will have to seriously weigh in. These are solvable problems, and some bit of tariff will be expected. US average tariffs are 2.5%. They're extremely low. Countries were having free lunch for too many years. Yeah. I think it's time to pay back or to readjust your tariff. And I think if we are smart, we can, position ourselves strategically to benefit us and also to benefit US.
Actually, this is a big challenge for the Indian diplomatic service and the Indian economic policymakers to change the narrative. Yeah. In perhaps President Trump's mind.
I don't think it's that difficult.
Yeah. I think there are some low-hanging fruit.
Yeah, it is doable, and you can get this done, and it can benefit larger part of Indian economy. Maybe a few companies here and there suffer, but we can't protect everybody, right?
Yes.
So I think it's doable. I hope better sense prevails.
Okay. Well, we are going to have a very detailed Indianomics on the tariffs, exactly where the reciprocity can be used to our advantage and where we can give in. So wait for that. Tomorrow, 10:15, is this detailed discussion on how to win the tariff problem. Sridhar Sivaram, pleasure having you with us.
Thanks,
Thank you very much for dropping in. A very good asset allocation strategy. Of course, it will be a micro market going forward, at least in 20. On that positive note, let's wrap up on Bazaar. The market is in the green and very good gains coming in